All right, welcome to the weekly meeting, December 7th. Got a lot to talk about, but I want to start with this video about this video is going to talk about the sanctions, or the tariffs that we are threatening our other trade partners, namely China, with. All right, so um, for those people who don't understand a tariff, we charge those other countries, or we put an extra tax, an import tax on the goods that are arriving here from those other countries. The other countries' companies don't have to pay that tax. The people who are buying those imports, the companies that are importing the products pay the tax, and then they mark the product up, and you eventually pay the tax. Okay, that's what a tariff is, and that's how it works. Um, so this video is about a 10-minute video, and it's going to kind of explain um, what's happening as we speak. This video is not old. It's a 3-day-old video, but if you go on YouTube, you can see that we've been through this like 6 years ago. Again, when Trump was in office last time, he did the same thing. So these countries have experience, and they came up with a plan. So here we go.
Whatever tariffs are required, 100%, 200%, 1,000%. They're not going to sell one car into the United States.
We're turning to the car industry now because the US and Europe have been going after China recently for unfairly propping up its electric car industry.
Why are other countries objecting to China's grand plan to become a technology superpower?
Is the US pushing the world into a new Cold War? You see, for decades, the US has been the puppet master, pulling the strings of global trade, economy, and politics. But what if we told you that the very tactics America used to stay on top, sanctions, trade wars, and all the other goodies, are now backfiring in the most unexpected ways? Yeah, we are talking about the US digging itself into a hole so deep it might not be able to climb out. Stick around, and I'll show you exactly how it happened. Let's get started. The US has played a dangerous game for years, throwing sanctions like confetti, imposing tariffs like they're candy, and pushing nations around like it's still the 1990s.
I will impose whatever tariffs are required, 100%, 200%, 1,000%. They're not going to sell one car into the United States.
But guess what? The world is finally waking up and saying, we don't have to take this anymore. Countries are waking up to the fact that they can build alliances, create their trade routes, and thrive without playing by Washington's rules. Welcome to the multipolar world, where the US isn't the center anymore. As we dig in, we're going to look at how these backfiring strategies are pushing nations to rebel against the old guard. The result? A world that doesn't need the US to thrive. And that's a problem the US is only beginning to realize. So, how are US sanctions backfiring? Sanctions were once the ultimate weapon in the US's global arsenal. Need to make a country bend to your will? Slap them with some crippling sanctions, freeze their assets, and watch them squirm. The problem? That strategy is officially broken. Take Russia, for example. The US slapped sanctions after the Ukraine crisis, thinking it would isolate Moscow and force them to cave. Instead, Russia teamed up with China and turned the whole situation into a global challenge to the West. Enter BRICS, an economic powerhouse that's getting stronger by the minute and starting to act as a counterbalance to the Western financial systems that have long dominated global trade. You know what's funny? While the US was trying to punish Russia, they were busy building an alternative global financial system with China. Russia, along with its new best friend China, is slowly distancing itself from the US dollar, with both countries working on digital currencies to make sure they're never held hostage by the US again. And did we mention that they're pushing for other countries to do the same? Suddenly, the US is getting a taste of its own medicine. But wait, it gets juicier. Countries like Brazil, India, and even Iran are jumping on the BRICS bandwagon, all because US sanctions showed them that they don't have to rely on the US to survive. Instead of isolating nations, these sanctions have forced them to come together, creating a new world order that doesn't depend on Washington's whims. And you know what's coming next? The US is watching this, and it's scary. You want to talk about a miscalculation? Let's talk about the US trade wars. You know, the one with China, the one where the US thought it could throw a bunch of tariffs at China and make them bend. Instead, China just flexed, and now the whole world is watching. And let us tell you, the US is not looking good. Here's the secret the US didn't expect. Every time it slapped tariffs on China, it opened up a world of opportunities for other nations. Suddenly, countries are realizing that they can break free from the US and create their trade networks. Enter the Belt and Road Initiative, BRI, China's ambitious project to connect the world with infrastructure, investments, and trade routes that leave the US in the dust. While the US was busy picking fights, China was building its empire of global trade that was leaving American dominance in the rearview mirror. But it's not just China. Take Japan and South Korea, two countries that were supposed to be in the US' back pocket. But after the collapse of the Trans-Pacific Partnership, TPP, these countries have started pivoting toward China. Japan and South Korea are now deeply involved in China's Regional Comprehensive Economic Partnership, RCEP, which is quickly becoming the new standard for trade in Asia. And guess what? The US is not invited. Before we continue further, tell us, are you enjoying the video? If yes, please like and share the video and subscribe to our channel for more videos about China's development, power, and influence on the world. Let's continue now. The irony here is delicious. The more the US tries to hold on to its control, the more it's pushing countries into China's arms. And now, China is sitting pretty as the new leader in global trade. America? Well, it's stuck in a trade war it doesn't know how to win. So, as the US faces off with China, the rest of the world is moving on, leaving Washington to watch as its power fades into the background. But don't worry, we've got more coming. The global South is rising, and it's about to make the US rethink its entire approach. The US is slowly losing its hold on the global South. And no, this isn't some slow, gradual process. It's happening fast, and it's a big problem for Washington. Why? Because these countries are done playing by America's rules. Look at BRICS. No longer just a joke or a side project, BRICS is now the real deal, with countries like Brazil, South Africa, and India calling the shots. They're no longer taking orders from the US or the IMF. Instead, these nations are teaming up to create a new financial order that's based on their needs, not Washington's. And guess who's not invited to that party? The US. But it's not just BRICS. The African Union AU is flexing its muscles, and countries all across Latin America and Asia are saying, thanks, but no thanks to US influence. They're rejecting US-backed institutions and looking for partners who actually have their interests at heart, not just a bunch of strings attached. As China invests more in Africa, it's becoming clear that these countries don't need the US to thrive anymore. China's Belt and Road Initiative has become the new standard for developing nations. Rather than begging the US for foreign aid and development loans, countries in Africa, Asia, and Latin America are building real infrastructure with China, and it's paying off. These regions are slowly gaining the autonomy they've long been denied, and they're doing it without Washington's approval. Now, as the US loses its grip, we're left with one big question. Can the US survive in a world where it no longer has control over the global South? The answer is probably no. So, is the US ready for a multipolar world? We're at a crossroads now. The US has spent decades at the top of the global hierarchy, pulling the strings and telling everyone what to do. But now, with China, Russia, and other rising powers gaining strength, the question is, can the US handle being knocked off its throne? The US has always resisted a multipolar world. NATO, the UN, and every other institution were built around the idea that America should call the shots. But now, with China and other countries challenging its dominance, The US is in full-on denial. It's clinging to the idea that it should still be the global leader, even as the world moves away from its control. The rise of China and India, the growth of BRICS, and the increasing power of multilateral organizations like the African Union and the Shanghai Cooperation Organization, SCO, all point to one thing. The US is losing its grip. While it clings to its outdated strategies, the rest of the world is moving on without it. So here's the big question. Will the US continue to resist this inevitable shift? Or will it accept the reality that the world is no longer its playground? Spoiler alert, it's not looking good for America. Let's be real. The US is fighting a losing battle. As its imperialistic strategies of sanctions and trade wars backfire, a powerful anti-imperialist resistance is rising. Countries around the world, especially in Africa, Latin America, and Asia, are rejecting US hegemony and embracing new models of growth and development. They're tired of being pushed around by Washington. Countries like China are showing the world that you don't need the US to succeed. China's development model, which focuses on mutual benefit and regional cooperation, is a stark contrast to the US's model of exploitation and control. China's Belt and Road Initiative is proof that there's a better way, and the world is catching on. The rise of anti-imperialist movements across the global south is making it clear that the US is no longer the leader of the pack. Its time is over, and a new world order is emerging, one that values cooperation over domination. The question is, will the US adapt to this new reality, or will it continue to fight a losing battle? We would like to take a moment here and appreciate you all.
Yeah. All right. So, there are some people who will agree, and there are some people who will disagree. And I'll leave that up to your personal interpretation. But the facts are, if you do any travel, you'll know, or if you watch any videos of other people who travel, you'll know and you'll understand China's influence in multiple other countries. And most of those countries are countries that we don't really involve ourselves with. There are 54 countries on the continent of Africa, and China has its hand in probably 46 of them, right? If you don't know what China's Belt and Road Initiative is, look it up. And it's pretty effective. It's been pretty effective. I think we've all been told you catch more honey, or you catch more flies with honey. That the way that we operate from a political standpoint is a domineering way, right? And the way that they operate is a little bit different. I'm not saying there's a right or wrong way to do it. I'll leave that to the politicians. But there are definitely some major changes happening, but how does that affect us? Like, what does that mean for us as traders, right? One of the main things that we can do is we can recognize opportunity, right? Y'all know I'm out of here. I'm out of the US. I'll always be able to come back. I always have my US passport, but I'm seeking a different passport, and primarily because it will afford me an opportunity to participate in business and in opportunities that are in other places, right? And when you get to other countries, if you want to open up bank accounts and the like, you need to be authorized to be there, right? So, I think the first step for me is to go and gain residency in different places, and my idea is to gain residency in a BRICS nation, a BRICS friendly nation. That way it will allow me to participate in economics on that side, the same way we participate in economics on the G7 or G8 side, and that, that's an individual choice. And I think it doesn't hurt. But you guys have to make your own decisions. Um, as far as opportunities or things that we have to be vigilant about or be aware of is if there's bad economics coming to the United States, we'll all be affected. Our family members, even if we're not affected individually, um, it's going to affect our family members. And we have to understand where we can put our money to better take advantage of the issues that might present themselves, right? If you guys have not bought crypto, uh, I I cannot urge you enough to to buy some crypto. We're in a bull run. We've been talking about this bull run for forever. Um, you know, we see where Bitcoin is. Bitcoin is over 100K. You know, uh, we were looking at Bitcoin was in the 30s. Bitcoin is up $70,000. It's over 100K right here. So all of us in this group have had ample opportunity to buy Bitcoin. We would be up $70,000. We were talking about it in the 30s. We talked about it in the 50s, the 60s, the 70s. We're over 100K. Um, you know, Solana. We talked about Solana. I bought a bunch of Solana. I didn't buy it where I should have bought it, but I eventually got in on the Solana train. A bunch of my Solana was bought down in the 170s. And here we are at 240, So whatever you guys are doing, if you're just gambling in the casino, trading and blowing your money, over trading and blowing your money, I would like to, suggest that you quit. Like, quit doing that. Treat this as an opportunity to create a better future, right? We don't know what the economic situation is going to be next year. Uh, you know, uh, these are unprecedented waters, right? Trump is in office for the second term. He's bringing his homeboys. A lot of people would say that Elon Musk bought the presidency. He's a South African. He's not even a U.S. guy. He might have been naturalized now, but he's going to be cutting the government. That's kind of scary, or it should be scary to a lot of people. What are they going to cut? Are they cutting technology programs? No, because Elon Musk is a technology guy. They're going to cut other programs that will probably affect other people. So we need to be able to align ourselves in a way that we won't be negatively affected by the change. One thing that's true is change is coming, man. Like, that's inevitable. We're not in charge. We just have to react to the people we have in charge, whether we like them or not. That's immaterial. And we had a chance to voice who we liked when we voted, and Trump got voted for. So that's what we're getting. And whether or not you voted for Trump, you need to understand how to use his administration, his term, to grow your finances. And it's a beautiful thing. We can all grow our finances. We all know we can Google any of Trump's businesses, and he's always overspent. It's the reason he has 6 bankruptcies. Everybody always says how great of a businessman he is. And the truth is, he always overspends. So you are armed with this knowledge before he's even sworn in. If you know that there's going to be a bunch of money spent, then you know that you should be buying real assets, real estate, crypto, uh, because that's going to be liquidity coming into the market. Buy the the stock market, I mean, we're already at 45K. We hit 45K last week. Bruh, like we were down at 38K just, a few months ago. This look, this is this summer, man. This is August, man. We've almost moved 10K. So we have to wake up. We have to start treating trading like the opportunity that it is for us to better ourselves financially. And maybe you're not a good trader. You need to start investing then. Like you need to start dollar cost averaging your positions. Whatever you have to put in your trading account, you can put it in. You just get 0.01s and allow it to grow. Stop trying to trade when you're not a good trader. Trade in the direction of price. We all know that US 30 is going up. We all know the S&P is going up. We all know when prices are going up and when prices are going down. So we all have an opportunity to trade in that direction. We don't have to worry about how much money we're making today or this week. We can approach this as how much money have we grown over the past month, the past 2 months, the past 3 months. And if we do it like that, then we'll wake up at some point next year and we'll be happy with our results. So when you hear things about what's going on in economics between Trump's policies and these foreign natures, it's not a scary thing. It's a matter of fact thing, right? We're either going to impose tariffs on these nations or we're not. It's a matter of fact thing. And if we do impose tariffs, then it's going to hit us in a certain way. And we're prepared to deal with that, at the appropriate time. If we deport, a bunch of illegals, it's going to affect us in a certain way. Our job is to be knowledgeable about how those events would affect the economy. That way we can react to those events. We're not shocked. We're not just complaining to our friends. Whether you complain to your friends or not, that's immaterial. But some people are only going to be able to complain to their friends. They're only going to be able to be at the mercy of their job, of their government. We have the ability to call our own shots, to make our own decisions. Hey, if you don't want to deal with the impending massive inflation that will hit the United States if we impose these tariffs, you can be like me, get your plane ticket and go to another distant land. And here's the thing, all those lands will suffer from inflation. But I'd rather be in Thailand when I get hit with that inflation, whether when it's a fraction of the cost to live in the United States, or Colombia. I'd rather be in Colombia or Peru, or Kenya, or one of these other nations. Whenever we get hit with inflation, you feel it a little bit, but you don't feel it nearly to the extreme that we have it now, right? So that's why I like to show current event videos, things that are actually happening, right? Now, depending on who the video is made by, you might get a slant, a political slant, whether it's made by a Democrat or a Republican or a socialist or a Marxist, right? But I think it's time that we as a people open our minds up to other views of the world. And the reason I say that is we're no longer functioning as a single country economy. Like the internet is global, baby. It's global. That means the communists can participate the same way the capitalists can participate, right? And our job is to understand what better suits us, right? You've been told in America that you need to work your entire life and then retire when you're 60. Now they say 70. It might be 80. Yeah, that's an option. I mean, that's what you have to do if you want to just abide by the American system of things, right? But there are other countries that have different systems that allow you to retire a lot sooner, right? And if you know how to utilize these financial vehicles, right? Whether it's trading, whether it's investing, then you can retire a lot sooner than that. But it's up to you as an individual to make the choice to start learning or to start participating and start doing things in a manner that will benefit you instead of hurt you. And that's why we're here as a group, and that's why we're here to help encourage and help each other get to that level, right? Um, and what I would say to you is, if you've been in this group for 4 or 5 years, or 4 years, I don't think we've been around 5 years, but if you've been in this group for 4 years and you still haven't figured it out, I'm going to tell you to try harder, right? If you're still gambling, I'm going to tell you to stop, right? Like this requires work. Change is never pretty. It always requires work. It's a reason why most changes happen after a revolution, a war, a fight, right? Somebody has to get beat up, and you need to beat yourself up, and maybe you are getting beat up emotionally and financially while you're learning how to trade. It's a requirement. Nothing is free. It's going to cost you something. And that's why it's so difficult to pick this skill set up. But I would encourage you not to stop. Everybody is going to have to pay their money. The group is free, but the tuition, this trading is not. And you're going to lose. And it's going to cost you some money. But just understand that's all part of the process. All right. Do I have any questions over, I guess, that initial portion about the different economics that are coming into play in between the American politics and mainly the Chinese? And which, if you have a question about, or if you question anything about the accuracy of these videos, man, I would just encourage you to Google the GDP. Google the GDP of the G7 nations. I mean, you can Google G7 and it'll give you all those nations. And then you can Google the individual GDP. How much in 2024, how much did these nations' economies grow? I already know that America's is like 2.8. And but you guys can Google that stuff. I think Great Britain is 1%. And then you Google those BRICS nations. And that should tell you everything you need to know. And if it doesn't, I mean, it is what it is. We have a failure to understand. Like, I can't. If you can't see it yourself at that point, then you'll never probably see it until it's too late. But let's talk about some of these trade opportunities. And again, I'm going to talk from a higher time frame, a higher level, and you guys have to kind of break the information down and trade it on your particular time frames. Okay. Here we are. We got 3 weeks left in December. A lot of people probably aren't going to trade over the Christmas holidays. I'm going to trade the chart. I'm not going to trade a date. So I think we can all see that we're going to end bullish for the US 30. We're going to end bullish for Bitcoin. We're going to end bullish for Ethereum. We're going to end bullish for the S&P. Solana, I think all of us can agree that we're going to have bullish order blocks on this 2-month chart. And I think personally it's going to be harder to find deep pullbacks for the indices and crypto. I think that we're going to get a little bit of acceleration, and then maybe around March, the same way it was this year, we'll start getting a little viscosity breakdown, and we'll start getting a little pullbacks. March, and then through the summer months, how it normally is a little bit choppy. So if you're trading those assets, I would think that now would be the time to start, piling in if you haven't, because you're going to get a couple of months of a probably faster growth before we hit that nasty little drizzle in March when everybody's taking profits. I think the next opportunity for me, the charts that I like more are the JPYs, and we had a lot of conversation. A lot of people telling me that the JPYs are going north, and I don't agree with that at all. I think that's comical. But hey, we all that's what makes trades. We have different opinions, and a lot of y'all told me to look at the 6-month chart, and I get it, man. We looked at these 6-month charts, and a lot of them had bullish order blocks. And my response to everybody was always, "Hey, man, you got to let this thing play out. We have months." And now, when we get closer to my date, we understand that these bullish order blocks can pretty easily turn into bearish order blocks, right? And I think that they will, based on the fundamentals that are out there dealing with these trades, and the fundamentals being what's going on in Japan and what's going on with that US dollar. I think generally speaking, the US dollar, if it's going up, the JPYs are going up. The US dollar is going down, then I think we have the JPYs are going down. And maybe some of you don't believe like that. And I would just encourage you to stick to your guns, but just understand, at least you've been warned, right? And, if it does go up, then that's cool. Then you don't have to heed the warning. But I, for one, believe that we're going down, and it will. I think it's going to be a pretty dramatic drop. Once we get to the levels we need to. I'm going to kill all this stuff on this JPY chart because I want to talk about it a little bit. Okay. These JPYs, I really like the way that they're setting up. If you look across most of them, you're going to see we had this bearish order block. Then we had the buy up. All right, some still have an imbalance, and that was a lot of people's problem. Is we didn't go high enough. But I do believe that all of these, at the end of the month, all of these pairs, JPY pairs, will have a bearish 2-month order block, at which point we can buy up to continue to sell. Some of these pair, some of the JPYs are more dramatic than others. Like we can see bearish order block. If that's how you look at it, that's exactly how I look at it. And then some of them, they aren't quite developed. Like UJ is not a bearish order block yet. Again, bearish order block. What I would like to see is for the second candle to close below the moving average, right? That would be a super confirmation for me that we are, we're close to that cliff, close to that drop off. So I think the opportunity for the rest of the month is for us to trade these JPY pairs down, right? Now, with that being said, you're going to have to come up with an individual plan, right? And maybe even the pair that provides you the best opportunity. And what do I mean by that? Well, if I pull up the EJ chart and sit it next to the GJ chart, the thing that stands out, oh, this is a month. Let me get to the 2-month. The thing that stands out to me is if I look over here at the EJ, we're sitting on top of the moving average, right? Which in my mind tells me that maybe we don't have as far distance to travel down as we would on GJ, where we're sitting on top of the first moving average. We need to close below the second moving average. I don't know if you guys look at the charts the same way that I do, but that will be one of the determining factors in choosing the pair that offers me the best opportunity to make money, right? Maybe if I get in EJ, maybe it's just going to go back and forth, for the next 24 days and close around this area, right? Or maybe it drops all the way down here. But it's still up to me as a trader to look at these and make the decision that, hey man, I think GJ at least offers me a greater opportunity if I believe that we're closing in a bearish order block, right? Or maybe none of those opportunities look as good to me as UJ, right? Maybe UJ is actually better than GJ and EJ. All I'm trying to suggest here is that when you pick the pairs that you want to trade, that you have some sort of logic behind your comparisons and your decision. Because at the end of the day, you're going to get paid based on the pip count that these pairs travel, right? And I'm not suggesting to be greedy and to stack up your lot sizes, sky high and all that stuff. All I'm saying is when you go in here and you start making decisions, as far as what pair you want to trade, make sure you're factoring in what you think, right? We all analyze these markets, right? And I like to analyze mine on a higher time frame and then trade in that general direction based on the lower time frame. If I'm thinking that UJ is going to be bearish, then when I'm get down here to these lower time frames and I get bearish order blocks on these lower time frames, then it's my cue to hop in the trade, to go south. If I get bullish order blocks and it's a pullback, then maybe I'm fibbing, right? I'm fibbing the down move and I expect to pull back to a certain spot, which gives me the next opportunity to take the trade further south. If you guys aren't doing that, I really suggest that you start incorporating that because in my opinion, this is what's going to provide you the best opportunity to make a profit and make it consistently, right? We all see that on this daily time frame, when price crossed over the moving average, we went up, right? And we went up a pretty good distance, right? So if we look at the distance that we traveled once we crossed over, 1,400 pips. So now we crossed over going down. If you think that this is going to be a down market, then your common sense would tell you that you think we're going to break this low. That low is 926 pips. So if you are a reasonable person, even if you're not the best trader, you can come up with a plan to trade in this direction for the next 940 pips to equal lows, right? Now, if you're like me, you're thinking we're going to go past the 940 pips because you think we're going to break this low. We have a drop from here to here. We had a pullback, right? Even if you're not Einstein, right? This was a low. We dropped and we broke this low. All right. We broke this low and we pulled back. So if I fibbed from here to here, this will give me a pullback. This is just a basic way to look at the chart. Maybe you do this, maybe you don't. But this pullback came right into your golden zone, almost to your 78. So if you believe in this, then you're probably going to believe that we're coming down to the negative 27, right? Now, obviously, I want to look over here to find landmarks or whatnot. But to me, you got about 1,500 pips worth of room here. And again, if you're a reasonable person, Sade, are you on this call? If you're a reasonable person, you can take advantage of this job. Of course, you can invite who you want. That's not a problem. If you're a reasonable person, you can take advantage of this move. You don't have to be a precision trader. You don't have to try to get the sniper entry. Sniper entries are for fools and and experts. So are you a fool or an expert? You know, if you're neither one, then don't worry about a sniper entry. Worry about getting in the trade, right? And trading that direction. Once you get in the trade, you don't have to do nothing. It doesn't matter if you get a sniper entry if you use a manageable lot size, right? So if you're trying to get a sniper entry and you're not an expert, then you're probably a fool. Okay. I'm not calling you a fool, but I'm just telling you that sniper entries are for fools and experts. So you just have to understand where you are in that explanation. You're either a fool or you're an expert. So I would worry about the bigger picture over the small incremental money that we make on a weekly basis, right? It's probably only a few of us who live off of what we make trading, right? I personally don't have to live off what I make trading because I have a retirement check, right? But what I'm telling you is there's a better way to approach this than the way that you're currently approaching if you're not a successful trader right now. There's a better way to do it. And I just hopefully explained that way to you, right? Did anybody not understand what we just did? So everybody understands. Right. This is
Yes.
this is life-changing stuff. It can be life-changing stuff. This gives us an opportunity to earn a living by trading. And more importantly, let me tie this into something else. There are better places to live. There are less expensive places to live. There are less stressful places to live than these United States. And there are people that look just like you and me that are living in those places, right? At the end of this call, we'll look at a video for those of y'all who want to look at a video from a black girl. And I like looking at videos from black women because a lot of times when you look at the videos from the black dudes, they're gonna talk about like girls in the video. There's nothing wrong with that, but traveling is about a lot more than girls, and they know that too. But you have to understand when they make their videos, they're gonna pander to the simps in the United States who pay to hear that conversation, right? In the United States, a lot of brothers are sexless, so they want to hear about how many girls are available to them, and they pay those young dudes to talk about it and show it. If you ever watch the live video, they're gonna pay on the super chats. They send them money and all that good stuff. That's how it works. But when you have a female overseas, many times she's just going to show you lifestyle and talk about that type of thing. My point is, as somebody who's been to multiple countries and lived in multiple places, I'm telling you, in my personal experience, life is 1,000 times better elsewhere. And the thing that the icing on the cake for us is if you earn US dollars and you live in those places, man, you have the best life, the most stress-free life. And you don't worry about paying for your next meal, or you don't worry about the roof over your head. You don't worry about getting gunned down at the mall. You don't worry about your kids getting gunned down while they learn English. You know, it's uh, it's unbelievable. It's really unbelievable. And for those of you who've never been out, I just tell you, like, we live in the most violent country in the world, in my personal opinion. And people talk about how violent Latin America is. Whether you're in Colombia or Brazil, the favelas, bruh, none of those places, man, in my opinion, are as dangerous as these United States. And you don't have to be in New York to get killed, or Chicago or LA. You know, you can get gunned down in a suburb of Atlanta, Georgia. You can get gunned down in Kansas City while you're at a Super Bowl party. You can get gunned down at Dollar General because you're the wrong color. It's just it's the reality that we live in, and instead of ignoring it, uh, we need to acknowledge it, and whether or not we um, are affected by how it's sensationalized, we just have that in our toolkit, right? So let's utilize the charts to, drive our income, right? Or if you're not at the level where you can make an income, utilize this as an investment tool, right? To grow your net worth over a longer period of time. And the way to do that is to use these higher time frames and trade in that general direction and grow your money a little bit more slowly. Eventually, you'll get to a point where you can trade at a smaller or shorter time frame, and you can make more money more quickly. Does that make sense?
Yes, sir.
Yes, it does.
All right. Is anybody struggling? Right? Does anybody have a problem uh, with trading or understanding what they should be doing as a trader? Now's the time.
I would say yes. I think I'm still trying to get there. Like I'm at the break even point. Like I make money, lose money, make money, lose money, but my account was still at break even type thing.
Okay, I appreciate that, Rich. I think that everybody, well, it's not that I think, I know everybody goes through that, right? If you're a break even trader, you're a lot further along than most traders will ever be. Most traders are just losers. But what you have to ask yourself is, do you have a strategy that works? Like, does your strategy have an advantage? Do you trade smart money, or do you trade another style? You trade like zone to zone or support and resistance? What is your trading style?
Yeah, so my trading style is pretty much support and resistance. I've been trying to pick up how you guys trade with the fair value gap because it looks real. It looks more precise. But yeah, my trading style, when price gets to a support, I would look to buy, or when it gets to resistance, I look to sell.
What do you trade?
I only trade USD pairs.
Okay, so let's look at GJ. USD. I mean GU. I'm sorry.
And the reason I only trade USD pairs is because I feel like other currencies move too much, or too volatile for me.
Okay, I mean it's all good. It's all good. I mean, whatever your reasoning is cool with me. So where do you start your analyzing at?
The daily, but I trade off of the 1 hour.
So you analyze from the daily.
Yeah, so I go daily 4
If
hour.
you come to this chart, where are you drawing you're drawing your support down here?
Yeah, I would have drew my support based off what price is that? So you see where it says 1.27.
Uh-huh.
So that last down right there,
Right here.
keep going back. Go all the way back to where it says actually USD.
Oh,
Yeah,
right
right.
here.
Yeah, that would have been my support. And then you see how it went below support and then came back up. I would have been looking for like a move, some kind of move up that would show me like the buyers are back. And then I probably would have traded up to like 1.3.
This is the resistance up here.
Yeah. Yeah.
So basically, you would have traded from this zone to this zone.
Yep.
Okay, like so, you say you take your positions on the 1 hour chart.
Yep. Then I would have went down to the 1 hour and um I was so from where it actually broke the support, I would have been looking for
Right
if
here
it up.
or here. Where would you have gotten the trade?
Honestly, right here, I wouldn't have gotten the trade till you see that black, like around that black line that you have right there.
This one?
Yeah, and then
What would have prevented you from getting the trade down here?
so it looked like a range, and it looked like the buyers and sellers are fighting. So I don't really know what direction it's gonna
Okay,
go.
I agree, but what I'm saying is right now we have the benefit of seeing the range. But
Uh-huh.
while this was going on, all I see is a break of structure here, right? Or a break of your zone here. Then I see a pullback. So I would have been confused. Then I get a break here that went higher. I don't know if that's higher to you, but to me, this went higher.
That's not higher.
It's not.
That's not higher to me. Yeah.
Okay. So we get a pullback and then it comes and plays again. And then I get a equal high right here. So maybe I'm not compelled. And then I get a pullback. And then I get a break right here.
Yeah.
And then you get a pullback right here.
Yeah. And that's when I would have started looking to try to get in.
Okay. That makes more sense. To me, the support and resistance just never worked because I would have like this line or would have been I'd have been looking for some action and I would have got killed a couple of times.
Right.
Now as a trader, to me, this right here was my signal. This wick right here that took liquidity, that took all this internal liquidity, that's
Yeah.
a buy signal for me.
Okay.
So I'd have been in the trade, at one of these candles. And it
Okay.
doesn't matter which one, but this was the signal.
That's something I've been learning from here too, with the liquidity grabs.
Exactly. Now you can take advantage of the up move. And I don't know which area you would have targeted, but all right, here's what I would this is what kind of always bothers me about traders, in this group in particular. So we've been talking about the GU needing to buy up, right? It didn't really buy up last month, and then we had this month where it pushed down, and we were talking. I know me and Andrew talked about this pair buying or looking for the buy, right? So if you look at this weekly, you see this bullish order block. And I don't know if you recognize that as a bullish order block. You said you don't really trade order blocks, but on the 4-hour chart, when we were talking about this pair buying, for me, here was your chart move, right? The market came down, this move up that broke these highs right here, and then it pulled back. There's your entry into this buy, which we already should have anticipated, right? We could have fibbed from this high to this low, and your buy up, probably your golden zone is going to be right around. Let's just look at it. Yeah. So from this drop to this area, when you got your chalk, you could have gotten this trade here, and you could have traded. Here's your golden zone, and here's your 78. So you could have traded this entire move up, like many of us did. You see what I'm saying? If you just tweak the way you're trading. And when I say tweak it, I don't mean trade exactly the way I trade, but I think you need to move your point of reference from the daily to a larger time frame. Because if you see this on a larger time frame, in my opinion, you can anticipate a longer move. And even if I'm looking at this on the daily, I'm looking at this drop right here. We broke this low and we broke this low. Is that a break to you? Are these
So the first one is a break. To me, that one's not really a break because it's like a fake out almost.
This is not a break?
Not really. It's not to me.
I have a problem with that. What about this one?
No, because the market just like popped back up.
Well, I get it, but so this is what I'm saying. If we start right here, the market moves here, it pulls back. Then it breaks this high. Then it pulls back. Then it breaks this high, and it pulls back. Then it breaks this high. So when it comes back here and breaks this low, this is my change of character. This is telling me the market is no longer buying. It's going down, right?
Yeah.
We never really pull back to this imbalance. We just continue. We broke this low. We broke this low. And to me, we broke this low. Now the market is pulling back. So for me, I would fib from this high to this low. And I know everybody doesn't see market structure in the same way, but I think that's 99% of the problem, I believe. So what I would say to myself is I would be looking for the market to come to this zone in between this blue box and this line based on the structure breaks. I'm looking for this market to push up into my golden zone, my 78. And when I look at my golden zone, I see some equal highs. I see some trend line liquidity. And I see this imbalance. So me personally, I would not be surprised to see this trade all the way up here to this imbalance, which is my 78. That's 500 pips. You see what I'm saying?
Yeah.
But if you don't ever look, or if you don't ever recognize that these structure breaks, or if these aren't structure breaks to you, then you're not going to see the potential of this move. And I'm not here to try to convince you to look at the market the way I look at the market. I'm just telling you what I see and the way I look at the market based on these lows. Like these lows to me are very clear. And every time we established this high, this was a low. We broke that high we just established, which makes this a swing low. Then we pull back. Then we break this high. So to me, swing low, swing low, swing low for me.
Yeah, I see the breaks going up.
So
yeah.
If that's the case, so if this is a swing low for you, and this is a swing low, and this is a swing low, when you get a candle close below those lows, and to me, we broke that swing low. Right?
Okay. Yeah, because the candle.
And what helps me sometimes is when I go to this line chart. If we close below, right? If we close below this low right here, let me just delete this. If we close below this low, if I can put a line across here and that line goes below that low, then we've broken it for me. And because we broke these, and it doesn't matter that we broke 3 of these swing lows, in my opinion. What I'm saying is we haven't had a retracement. We didn't have a retracement when we broke that swing low. We didn't have a retracement when we broke this swing low, right? But it looks like we're having a retracement, right? So we broke this swing low. And maybe on a higher time frame than the daily, this is the only swing low that matters. Maybe that's on the 2-week chart, right? But I still see swing lows on a 2-week. Maybe that's on the 1-month chart. My point is, when you get to this 1-month chart, these lows around here haven't registered as being broke. You see what I'm saying? So on the 1 month, this is a low right here. This is the swing low because you got a pullback, and we broke that high. So if you were trading this in a different manner, if you were just trading from this low to this high, you'd be looking for a pullback to your golden zone or your 78. And we got a pullback that went all the way to the 88. So there's confluence that on the higher time frame, this is just an up move that broke these highs and a pullback. So now you can buy this back up. So there are some people out there trading who are bullish on GBP USD, and they're viewing this as a buy. So they're going to buy from here and they're going to hold it to this high. So if you're bullish, like me, on GU, if you're bullish, you're thinking that we're going up long term. If you're bearish, which is perfectly fine, if you're looking at this from the daily, we broke these lows, so you might be bearish, but you've never looked up higher, so you don't see it yet. You're bearish, but maybe you're just trading this as a retracement move. It's not that either one of those ways of trading is wrong, as long as you're taking this to the next level. Maybe you're bearish and you're just trading this back to this zone and you're going to take your profit. There's nothing wrong with that. Or maybe you're taking it to this imbalance and you're going to take your profit. There's nothing wrong with that. The problem comes in when you never look above your daily time frame, because at some point you have to understand that a higher time frame is going to trump this daily time frame. The daily time frame is a big dog compared to the 1 hour, but it's not the big dog forever. So for me, I like to understand from the higher time frames, like what's really going on. You know, the higher time frames told me that this move right here is the major move, and this is just a pullback. Yeah, we broke all these lows. But if you look at this, we went from here to here, we pulled back. We went from here to here, pulled back, and went to here. This is just a complex move up, in my opinion. We're going from here to here, we get a pullback, and then we go from here to here. Does that make sense?
Yeah, that makes sense. Yep.
So whatever time frame you're trading on, you have to be flexible enough to look to the next higher time frame. Sometimes you got to go two time frames up. But the point is, once you make your decision, and I'm the horrible person when it comes to marking up support and resistance. It just never made sense to me. But once you make your decision, you have to have things that trigger you into getting in that trade, whether it's liquidity grab, whether and to me, whether you trade support and resistance or not, you have to understand or recognize what a grab of liquidity looks like, because to me, that's going to be your best indication that a move is happening. Whenever they grab that liquidity, you can expect the trade to go in the opposite direction. And once you get there as a trader, to me, it cleans up a lot of mistakes that you would have made prior, because now you're reacting to the liquidity. And you're understanding that, hey, when we grab this liquidity, we're going in the opposite direction.
Okay, yeah, because it definitely looks like compared to where the liquidity at, I could have gotten the trade. I would have gotten the trade a lot earlier.
Yes. And you could be finished because maybe you only needed 50 pips. right? Maybe if you recognize this as a liquidity grab, maybe you're saying, okay, I can trade from here to this high right here. That's 82 pips. Or maybe you had it mapped out where I can get a 100 pip move and I'm done. All those ways are okay. You know, there's nothing wrong with any of that. But to me, your signals, you're going to be better off if you tie your signals to liquidity than to anything else. Does that make sense?
Yes.
All right.
I have a quick question to what you were just chiming in on. So, do you have the liquidity grabs tied to like those kangaroo tails or the tails?
To kangaroo tails? I don't even know what that is.
Well, kangaroo tails is any candle with a long tail to it connected to some type of structure.
Can you show me? Can you point it out?
Yeah, your finger's right on it. So the signal you was telling him about, that, Yep, right there.
This is a kangaroo tail?
We just call it kangaroo tail. But when you talk about liquidity grabs, how are you looking for the liquidity grabs at structures?
Well, okay, let's talk about this. There are many ways that you can see this as a liquidity grab. So we came from down here and we came up here. We pulled back. This is a good pullback. If you fib this move from this low or this low, however you want to do it, you can fib this move. We got a double top right here, which tells me that this is a high, right? Do you recognize that as being a high? And then this being a pullback? So when the market pulled back here, it only needs to pull back 50%, and then it ranges, right? So this, you recognize that as a ranging market consolidation, right?
Correct.
So the point of consolidation, it creates equal highs, and it creates equal lows, right?
Right.
So once you see one side of that liquidity ran, that should be a signal. So when you see this range across here, it's either going to take the liquidity from the top and then sell, or it's going to take liquidity from the bottom and then buy. Now, a higher time frame, in my opinion, will tell you already which you should be looking for. But if you're just a person who doesn't look up, then you have to recognize your signals when they happen on a lower time frame. A person on the higher time frame already knew we're buying. Like we came in here at the first of the month, understanding that we're buying. But if you're not looking at it like that, you're coming in here this day on December 4th looking for a trade setup. Then when you see this liquidity grab, then you have to understand, okay, we had a push up and a pullback. The market is ranging. I need to be looking for action coming off of this range. And either that action is going to be taking liquidity from the top and going down, or it's going to be taking liquidity from the bottom going up. Does that make sense?
Yeah, that makes sense.
And what I would tell you is also pay attention to the time, right? And in this case, this liquidity grab happened at 4 a.m, but you didn't really get your move until New York session started. But if I'm coming in looking at my charts at the first of New York session, if I'm a day trader, which I'm not, but if I'm a day trader, then when I'm coming in here looking at my charts at 7 a.m., then I already see the up move, I see the pullback, and I see the liquidity grab. It's all there if you understand what you're looking at. And you come in here at 7 o'clock and be like, well, there's a liquidity grab happening. I can get in now, protect this low, and I should be good. And
so,
I'm sorry, go ahead.
Yeah, so when you mentioned time, because I'm new to you guys' group, but I I hear that a lot of time in smart money concept, ICT concepts,
Yeah.
where that New York session is like your golden child almost, where you're looking for your setups. Am I saying that right?
Well, yeah, you got a kill zone. It's not just the New York. Every session has a kill zone. Every session has a time that you're looking to take that trade. And it happens. It's very regular that trade happens. If you start looking at those times, then you start understanding, man, I can really take advantage of this trade. For instance, I like trading London session. And when I go in London session, either that 1 a.m. or 2 a.m. candle is the candle I need to take advantage of. And if you trade ICT or smart money concepts, you're going to trade around liquidity, right? Structure is cool, but the liquidity is going to tell you the truth, right? When this market comes out here, these brackets are Asian session. This is Asian session for me, right? We come out of Asian session at 1 a.m., we push up. So maybe you looked at this as a up move. Then you get this boom up. This wick right here tells most smart money traders everything they need to know. Right. We went up. We got this super wick. The super wick happened at 2 a.m. If I target these Asian lows, I'm going to get paid. And guess what happened? You got paid. So it's the same thing over here. We come out of Asian session at 1 a.m. You get this indecision candle. I already know we're at the bottom of Asian session. If I target the Asian session highs, I'm getting paid. Right? So this is the same thing. Now it went up. We got NFP. NFP is just a dumb move. We come down here. Why did we come down here? We took out these Asian session lows. I'm still bullish on GU.
I got you.
But this is just a pullback, right? So you have to kind of look at the bigger scheme of things, right? And if I'm looking at the bigger scheme of things, we came from here, we pushed up with this up move, and we broke these highs. So if I'm fibbing the move, and I would never do this just on the 1 hour. I would always do this from a higher time frame, but because I understand or I can see the structure in the market, I know that this is where the pullback is. And this whole move, we have to take this whole move in context. This whole move took out this high. So I should expect a pullback to the discounted area, maybe the 78, before we go higher. So I would look in these areas to see if I have anything that stands out. Does anything stand out to you in this area, in your golden zone or your 78?
Gotcha.
Well, I'm asking, do you see anything? Do you see this gap in the market right here?
Hold on, let me see. The fair value gap.
Well, the market gapped. It went from this candle closed right here. This new candle opened here. That's a gap.
Right.
Can you see that? When I look at this chart, I see this gap. I see these lows that haven't been taken out, but the market is going higher. A reasonable trader is going to understand we're going to go take out these lows and probably fill this gap. All this action happens between your golden zone and your 78. Right? At your 78, you have relative equal lows. So if the market fills this gap and keeps going, I'm going to think, hey, man, we're probably going to take out these relative equal lows, right? Or we could target this low right here. Not that we have to, because this wick already ran these lows. So I would think that there are 3 areas that stand out just when I look at the chart. This is just me looking at a chart. I fibbed this move. The Fibonacci helps me understand my target areas. If you believe that the market needs to pull back at least 50% to the discounted rate, which is what smart money people say, I start looking at things in my discounted area that could trigger a reversal. There's an order block here. there's liquidity, there's lows right here, Asian session lows, there's a gap. All of these things, there's relative equal lows here. All of these things are areas that could affect my trade. But if I wanted to open up and go short when the market opened on GU, I would probably have a pretty easy trade down to these areas, right? I would probably have an easy trade. I would trust my trade these 48 pips. All right. Maybe you trust your trade to this gap, but me, I would trust my trade to these 48 pips. 48 pips is not enough for me personally to risk my account trading down 48 pips. If it's 100 pips, that's cool. But maybe you're a person that trades on a lower time frame and 48 pips is perfectly fine, and you're willing to take 48 pips going counter trend because you see that this liquidity is a high, it's a high chance that we take this liquidity. That makes sense?
Yeah,
And,
it does.
and another thing, this down move broke structure. It broke these lows to me.
Right.
So that means we'll pull back up and then go further down.
Are you drawing in your order blocks, or are those automatically coming up
Well,
with
I
the
see
Asian range?
this is the order block right here. This is a bearish order block. This is what told most people that the market is going to drop. But what you don't see in here is there's an imbalance, which we should probably trade back up into this imbalance for the drop. And what I always try to explain to people is if you fib this candle, this red candle of this order block, and you mark up your zone, you can drop down to 2 time frames, which would be the 15-minute, and you can probably find your imbalance in this zone. I'm going to delete these fib. So this would be my area of interest that I want to find where my imbalance is. And as soon as I drop down, you see this imbalance? You see this candle wick of this red candle? It doesn't connect with this candle wick of this green candle?
Yeah. Yeah.
That's what we call an imbalance. So I would want to see this price trade back up to this imbalance, probably to my middle line. And this is where I would be looking to take my short. I would have my short set up. I would want to go short at this point.
Yeah.
To my targets, right? In my golden zone. This would be my first target. That's 90 pips. And then that gap in the market.
Yeah, second.
Would be my second target, which would be 107 pips, 108 pips. So this, for me, would be a trade idea that might pay me 10%. You see that 10.26?
Right.
A 10 pip stop loss, 108 pip gain. This is a more attractive trade setup for me. Does that make sense?
Yeah, it does. Yeah. So it feels between the two wicks, that's where you got that zone at the top.
That's the imbalance. That's what we mean when we say there's an imbalance. And the thing that makes this significant is this momentum candle that created that imbalance, it broke structure. It broke these lows here. Then when it traded back up, it did not close the gap. It just kept pushing down. And eventually we ran this liquidity, right? But on a higher time frame, on a 4-hour time frame, you can see that push down actually broke these lows. That's a structure break. So now we just understand that we want price to trade back up here to sell down. If it doesn't trade back up here, I don't have a trade. I'm not trading. I'm not sacrificing. I'm not making adjustments because this doesn't come back to my area. It either comes back here and I take a trade, or I just don't take the trade. This is a counter trend trade, first of all.
Right.
But if you're going to take the trade, then you have to take it based off of your rules.
Okay.
All right. Do I have any other questions? Yeah, it's a fair value gap. Who is TPAD? TIPAD. Yeah. Fair value gap, imbalance, whatever you want to call it. Some people call them, whatever gaps. But my point is, if you recognize or if you put these in your toolkit, you have a better opportunity or a better chance of finding success. Is there anybody who's lost? Anybody who need help?
Well, I'm still new to the style, but where would you say somebody should start within you guys' community? Start kind of getting some repetition on understanding some of these concepts.
Okay, there's a lot of information in this community, and because we've been around like for 4 years, it is difficult to have a starting point. But on the YouTube page, I've made several videos. There are market structure videos. I think if you don't understand market structure, you are going to be hard pressed to generate profit on a regular basis. And here's the kicker, and here's the problem. There are people. There are different ways that people look at market structure, and what I mean by that is many people use these wicks in a different manner, right? For some people, whenever we get a market structure break, a wick is considered a market structure break for some people. For other people, a body candle close below a low is market structure break. Some people, they will use this wick and say, hey, the body has to close below this wick. What I would tell you is, to me, the easiest way to do this, to take out all the noise, is to use your line chart. And the reason I say that is because the line chart is going to give you the same picture every time. We either break below this low or we don't. And if you break below this low, that should be a change of character on this time frame. It's not a change of character on the daily. It's a change of character on the 1 hour. So if I break this low, that's the market telling me that on this 1 hour time frame, we're going to go lower. We broke this low, we broke this low, and we broke these lows, right? We didn't break this low. So if I use this low, right? If I use this low, then what I could rely on, me personally, is for the market to trade back up into this area, right? Into the golden zone or the 78. And I can trust that the market is going to come down to this low for me. If I'm just trading on the 1 hour chart, because we broke all these lows and now we're pulling back. Now I can fib from where the market came from to where it went. Now I can expect the pullback to come to this area. And then I can look to take a short to equal lows. So for smart money traders, this would be the first TP, right? And then you would look at these lows as your next TP, TP opportunities. Does that make sense? Did I lose you?
Yeah, it does.
Now, I want you to notice that when I line this up, we looked at this a completely different way than me and you looked at it the first time, right?
Mm-hmm.
Now, look at where my entry was from when me and you did it the first time, when I showed you how to drop down and look for your imbalance.
Mm-hmm.
Look where my entry is for my imbalance, and look where the entry is when I just do it this way. It's the same freaking entry, right? This entry is at the 78%, which is the optimal trade entry for if you trade like ICT. This is confluence for me.
Okay.
I got the same entry doing it a totally different way. So for me, this trade setup is a solid trade setup. All I would have to do now is set my alarm to alert me when the trade gets to my area, right? Or if you're a limit trader, you just set your limit order and you walk. If I set a limit order, I would probably protect this high, because I wouldn't want to get wicked out of the trade. But I'm sorry, go ahead.
You have a preset stop loss. You're pretty much just trying to protect. You're protecting that high from getting.
Well, yeah, but hold on. I do have a preset stop loss because
Okay.
if I look at this is the way I believe. If I'm correct, the high of this candle will not be broken because this is the imbalance that has to be ran before we go down south. So if I'm correct, then I don't need to protect anything more than the high of this candle. Now, sometimes the market makers know that there are people who are going to put a stop loss above the high of this candle. So if there is $1 million worth of stop losses sitting at the top of this candle, they can wick and take those stop losses as long as they don't violate the swing high, and they can keep going south. So if you do this, you're going to risk losing your trade by putting your stop loss above this high. So many people put the stop loss above this high. It's a matter of personal preference. This would be your sniper entry. And remember what I said about snipers, right? You're either an expert or a fool. So you just have to decide where you're going to put your stop loss. Do you want to make more money per pip? Then you put your stop loss here, right? But if you want to be sure that you make some money in the trade, you put your stop loss here. Maybe you don't make $58 a pip. Maybe you make $15 a pip. But with this trade, with the stop loss here, there's a higher likelihood that you're going to have a successful trade than it is if you put it here. Does that make sense?
Yeah, it does. Yeah.
All right. Does anybody else have questions? Is anybody else lost or not understanding? There are so many ways to trade, right? And they all will work. The thing that's going to make you a successful trader is your consistency. You have to be consistent, and most of us are not consistent, right? The same way we're not consistent in our relationships, whether it's our relationship with God or our relationship with our significant other. We're not consistent in our lives, our diets. We're not consistent in anything. So that's why trading is so difficult, because we want to be that same inconsistent person and consistently pull money out of the market. And it just does not work. It doesn't work. We're going against AI and computers and big companies who spend, millions of dollars educating their traders, using, getting them shrinks. You're trading against those people. And you're doing it and you're being flippant about it. And you're using the mentality that, it doesn't matter that these guys are spending multi-million dollars trading. You're going to come for free and learn from Todd, and you're going to make $1 million. That's a freaking joke, man. That is an absolute joke. And the fact that you're approaching it like that is funny, man. It's funny. It's never going to work. It's never going to work. I spent thousands of dollars learning to trade. I spent $1,000 with Ruby learning to trade. And then I spent like 50,000 by throwing money in the market. You know, when I first started learning to trade, I read this article about this trader, and he said, "Man, I learned how to trade after I spent $300,000." And what I didn't understand then was he spent $300,000 because he was gambling in the market. He gambled away $300,000 before he learned what not to do. And that's how trading works. You either take your time and you learn, you know, what I'm trying to show you for free, or you keep being impulsive, you keep over trading, you keep gambling, and you spend a lot more money. But one thing is for sure. If you don't take heed, and if you're not disciplined, it's going to cost you a lot more money than it should cost you to learn how to trade. There's a way you can learn how to trade for free by using a demo account. But the problem is most of us just don't have the discipline to stay in that demo until we absolutely know what we're doing. I was told to stay in a demo account, but I figured, you know, I was a little different. So you have to decide as the individual what type of trader you're going to be. The kind that pays the 300K or the kind that learns for free. And when I say free, that's a relative. Nobody learns for free. So it's going to cost you some money. You know, those people, some people trade prop firms because, you know, they tell me it's less money. And, you know, depending on who you are, that could be true. But you could be the type of person that keeps throwing $100 at a 10K challenge. And you might do that 500 times. What's the difference? You know, I would tell you that just learn to trade first. Then, I mean, before you buy a prop firm. And then I would tell you after that it's probably better not to even buy the prop firm.
Also, what's your YouTube channel? That way I can go ahead and slot that in, start looking at some of those videos.
I'll put it in the chat here. Let me you're part of the Discord, obviously, right?
Yes, sir.
So if you go here in the Discord and you look at recorded Zoom calls, you see where I had the weekly meeting? You follow me?
Uh-huh.
If you click on any of these weekly meetings, it'll take you right to the YouTube. And what you should do, what I would like for y'all to do is subscribe. Subscribe to the YouTube. Turn the notification bell on. You'll see when the videos are dropped. But if you go to this YouTube page and you type videos, or you go to the videos, it'll give you a lot of videos. I'm gonna have to come and clean this up to put the weekly meetings all in one, and then the other videos in another. But I have a beginner trading videos. There's about 5 or 6 videos, and then if you come down here, I do the smart money videos too, and it tells you exactly what to look for. This is ICT's video that's telling you about time and price, right? The anatomy of a high probability trade setup. I'm giving you everything that I look for, you know, so in order for a high probability trade setup. Trade management, you know, like all this stuff is right here on the YouTube, and I get it. It's a lot of information. But if you reached out to me on a one-on-one, I don't have a problem with taking you from point A to point B, because it's like second nature to me at this point. But the problem that I've found is, you know, I'll work with somebody, and then they'll be in Kim's class trying to learn what Kim does. Me and Kim don't trade the same. If Kim is teaching you how to trade, You have to stick with that process. You have to learn that process, because jumping from style to style is only going to hurt you in the long run.
Yeah, that works.
Yeah, and at the end of the day, after I train you on how to trade, you're still not going to trade exactly how I do it. You're going to take what I show you and you're going to tweak it to fit your personality, your attention span, your comfort level. You're not going to do it exactly the way I do it, because we're not the same person. I trade very high time frames. If you can't hold a trade, you're not going to be able to do or trade the way I trade. It doesn't matter. It doesn't mean that you can't take what I'm showing you and apply it on a lower time frame. I just showed you how to go from a 4-hour to a 15-minute. You can do the same thing from a 15-minute to a 1-minute. And you just take this trade from here to this equal low, and you can get out the trade. And if you do this and you do it 3 or 4 times per day and you win 57 pips, you only need to take 2 of these pips or 2 of these trades to win your 57 pips. 2 of these trades a week, and you got 100 pips a week. If you make 100 pips a week, you can flip your account every week.
Right.
You see what I'm saying?
But that's interesting in your. That's what actually, my guy was Will telling me. That's how you guys would turn the account.
Yeah,
It's called the pips.
That's exactly correct. But it takes time, and it takes you developing your skill set, and then once you develop your skill set, you have to come up with a strategy to employ that skill set. You can't just arbitrarily jump in the markets and trade. It doesn't work like that. So maybe you need to take your skill set and you need to apply it. And maybe you need to apply it only on New York session, if that's how you trade. Or you apply it on New York and London session, if that's how you trade. The way I explained it to people is to take that weekly order block, fib, do the same thing we did on the 15-minute. We do it on the weekly order block. As a matter of fact, I'm going to do it for the benefit of the people in the group. I'm going to look at the weekly order block. As a matter of fact, Ish, thanks to Ish, she posts this information every week for free. You don't even have to do it. She comes in and she puts the information in the Swing Trader channel right here. Last night, she said, hey, these are the order blocks. AUD CAD has a bearish order block. EUR NZD bullish. I want to look at these NZD pairs because they went like 400 pips. So let me look at GN. All right, GBP NZD. You see how you got a small candle and then you got this extreme candle. For me, that would be considered a bullish order block, and to Ish, it's considered a bullish order block. So all I would do, I'm going to fib this first. I'm going to fib this green candle. All right, it doesn't really have a wick on it. So maybe it's going to buy up a little bit when the week starts. But I get my golden zone. I put the rate at my 78. Then I'm going to delete my fib. Okay. What I would tell you is look around, right? If you look at this chart, I can clearly see that this wick is the last high, right? In recent memory, this wick, this is your high right here. So maybe you mark this high up, right? Because maybe before we go down, maybe we're going to go up to this high and take that liquidity. All right, that's about a 53 pip move, which is it can very easily happen that we go and take that high, right? Or the next most likely thing is if we just start and we take this high. But for me, I think we're going to pull down into this area, right? And then either buy back up to break the high, or we'll pull down in this area and it'll react. What I like to look at is from here to this area, to my golden zone, that's 200 pips. I can make my money in that 200 pip drop. If you're not comfortable, this is a counter trend trade. So if you're not comfortable trading counter trend, maybe you want to wait for it to come here and give you a reversal in your zone and you just trade it up. But for me, I'm going to look at it the way I normally look at it, which is I want to be able to trade this move back down to my zone, right? Or the 78 before it goes back up. Immediately in my zone, I see double lows right here, equal lows. I see an order block with a low. I see an imbalance, and I see another imbalance. So I think there's a high probability that I can trade at least to my 200 pip range. When I look up here, I see that we have relative equal highs here. Again, this is the high, so I don't have to worry. I can wait. I don't have to jump into a trade very early. I can wait for price to show me that it's going to sell. And this is the 4-hour time frame. I can drop to the 1 hour and say, hey, here's some lows. So for me, I can wait for the market to drop below this low. So what I want to see is a chalk. I want to see the market do what it, maybe it goes up. Maybe it pulls down and breaks this low, right? Because there's an imbalance. And maybe it bounces. Once it does that, I got the market where I want it. Now I can get into a short from here down to here. There's an Asian session lows. There's some equal lows. Here's some more Asian session lows. So I would feel comfortable taking this to these Asian session lows. That's how I view this market. Do you see how simple that is?
Yeah, it's simple because I had a friend that trades just like this, so I'm seeing it again, but I'm seeing it from more of a structural way of doing it. How you break it down, so that's helpful.
And you see the liquidity. You see all these highs right here?
Yeah.
So it would, you would think that the market is going to run these highs, then come down, right? So whether it just runs these highs or it runs this high, you have it marked on your chart. So if this was a trade that you're interested in taking, all you're doing is waiting until the trade shows you that it's ready to start selling. Like even if this break is a more dramatic break and you break and it comes to this low, when it pulls back, that's when you want to get in your trade.
I got you.
And what I found out is most of the time, Asian session is going to be some bull jive, right? It's going to play around. It's going to take people's money. And then on that London session, right? That first candle or second candle out of London session is when you're going to get your real stuff. So it might play around up here. And then right when London starts, it might push down, pull back. Now you enter that trade and you can go to sleep. And you allow this trade to do what it does and you take your profit. If you do that consistently every week, you're going to make a killing. And it just takes one trade that week. You're going to find many people that are going to be in the market every day, all day. And they're not going to make money because they just giving their money away. If you are meticulous, if you are particular, if you are picky about your trade and you look at it on the weekend and you say, hey, this provides me a great opportunity, and you only look for this opportunity, you only wait on this opportunity, and you only get in this opportunity if it gives you what you want, then you're going to do fine, right? And maybe you pick 3 of these opportunities. GN, right? That was on her list. EN was as well. And it's the same setup. This is EN. The only difference is this liquidity has been taken on EN. And maybe there's okay, we didn't take out this liquidity. But if I'm using this as my swing high and this is my swing low, then I see that we push down and here's my 78. So maybe we push up to my 78. Maybe at the 78, there's an imbalance. Well, there's some highs over here. So maybe price wicks up there. However you want to view this, if you're just as stingy with your money and your trade setup, then you're going to be fine waiting on this trade to set up. And again, you're going to mark your low on this 1 hour and you wait for you get a break. There's the same imbalance you have. So maybe we break into the imbalance and we pull back, and maybe you catch your trade and you go low. And here's your equal lows in your zone. There's your Asian session low. So you're still getting over 100 pips on this trade. Does that make sense?
It does.
Now,
It does.
even though I say this almost every week, you still have people that go to that market and get jacked up every week. They get jacked up every week. I've been saying this for at least 2 years. So just because you can see a trade set up, and just because it can be pointed out, doesn't mean that people have success doing it. It's because they're not disciplined.
Okay. What would I need to do? Just reach out to you to start learning with you?
Yeah, I mean, just hit me up a DM. Let me know when you're like what your schedule looks like.
I'm sorry. Say that again.
I say just send me a message on Discord and let me know what your schedule looks like.
Okay. Well, I'm full. I'll send everything in there, but I'm full time right now in the market. So I got 24/7.
So you trade. What session do you trade?
I swing trade, and I'm a limit order trader. So the sessions really haven't been something that's been on my have to be in my trading plan.
Okay, so what do you say you trade the USD pairs? Is that you?
No, that wasn't me.
Okay.
I trade GJ.
So do you mind sharing your screen?
I'm not actually on that one. I'm
okay,
actually on my iPad and phone.
Okay, it's all good. Why only GJ and Go? Just because that's what you look at?
That's what I was trained on.
Okay,
and
that's cool.
the volatility, like the way it moves, it was just faster than trying to do other pairs at the time when I was learning.
Okay, it's all good. All right. Does anybody else have an issue?
Just have a quick question.
Yes, ma'am.
Could you maybe just mention when the sessions, because you mentioned Asian sessions, London sessions, New York sessions, the times, because I was looking online, it says that the London session was 8 a.m. to 4 p.m. I think that's GMT. But another site said 7 a.m. to 4 p.m. But what times do you guys go by? I know yours is probably like Eastern time or
okay. So what I like to do for London session at 1 a.m. New York time. And that's probably the German when Germany opens, right? At 2 a.m. is when I think that's 8 a.m. your time, New York. I go by New York time because I learned from ICT and my charts are set up on New York time. So this is the start of London session for me, or the kill zone for me, from 1 a.m. to 3 a.m.
Okay.
That's when I look for my trades to happen, right? Now, this takes some time because you have to understand what you're looking for. And if you don't understand what you're looking for, this can be very frustrating. The reason why I put the Asian range on my chart is because it makes it so much easier, to take your trades. When all the stuff happens on Asian session, and then you get this candle and you get this wick tail on it that took out the Asian session low, it's a very quick reference, to where, hey man, I know we're going higher and I can target the Asian session highs. Or if you believe that the pair is going higher than that, then you know that this is your entry. You protect this wick low, and at 2 o'clock, man, you target your 100 pips or wherever you feel like the market is going, right? So if you would have understood that the JPYs were going long, that's 161 pips that you were able to take advantage of during your London session kill zone. It's the same thing at New York session in the morning. In New York session in the morning, you have your kill zone, right before the market opens, and then you have your afternoon session or your morning session. This is a kill zone morning session, 9 a.m. The market starts running. If you got in at 9 a.m., you didn't have to do anything else. It just ran way up, right? It just ran straight up. But if you understand your kill zone times, then you understand when you look for your move.
Okay.
And, again, especially for people like you, Sade, you're so new that this is months away, if not a year away, for you to start incorporating that time. And I mean, unless you're a person that writes down the time and say, I'm only going to go look at the market at this time. You know what I'm saying?
Yeah.
So I think that's important to understand as a trader too, is that you have to give yourself grace. It's a reason why ICT and these other guys say, hey man, it's easy to find the trade after the fact. It's harder to do when the market is moving, because most people aren't accustomed to, they don't know what to look for, and they don't have a time that they're looking for. It's always time and price, right? If you're in the market and it's your New York kill zone time, then you understand, hey man, we've wicked these highs in the New York kill zone time, right? You see that at 7 a.m.?
Yeah.
You wicked all these highs. So a trader who's trading the ICT kill zone is shorting right here. And then you can catch that whole move.
Right.
So, it just takes a little time. I started you off on how to analyze an order block, the weekly order block. The reason I started you off with analyzing a weekly order block is because, in my opinion, it's going to give you the best opportunity to position yourself to take advantage of the market, because at the beginning of the week what needs to happen. The market needs to pull back and then keep going. Many times it won't pull back. It is just going to keep going. And in that, if it just keeps going, then you don't have a trade anyway. No harm, no foul.
Right.
But if it does pull back, you're in the know. Like you have a great idea of where the market is going and why it's going there. Does that make sense?
Yeah.
So that's why I like to start you off on the weekly order block. And that's why I like for you to understand why you're marking up your zone, what to look for in your zone. Once you have an appreciation of that, then you can start working on the nuance of, hey man, how do I actually enter this trade?
Right.
What am I looking for to enter this trade? And all of it is going to be the same thing. You're going to look for structure breaks. You're going to look for liquidity grabs. And those are going to be your keys to how to take your trades. And all of this is happening on different time frames, right? The weekly time frame told you that the market pushed up last week and it needs to pull back. All right. When you drop down to your 4 hour, you can look in your zone and see your areas of interest in your zone. But now you got to drop down further to see how the structure looks and what would constitute a break of structure for you to be able to get into a trade to take it to your zone. Does that make sense?
Yeah.
So it might not seem at first when I'm explaining it to you, it might be a little bit confusing. Like, hey man, you know, I get it. We're doing these analysis on these order blocks, but I don't understand how to enter the trade. Well, it's because I want to analysis you to death first.
Mhm. Yeah.
First, I want you to analyze, because that's important. Once you're an expert at your analysis and you can recognize your areas of interest in your zone, now you can work on the entries. You're not trading with real money. But you have to fall in love with the details. And once you fall in love with the details, now you can understand, man, I can see how to make a bunch of money.
Mhm. Okay. Thank you.
Todd, I have a question.
Yes, sir.
Like right here on the GN, like you had explained one scenario where it could start selling. Could you explain the other scenario if it did go ahead and take out the highs at 199.11? I mean at 1911.
You mean right here?
Yes.
Well, okay. This was the high on that other candle over there. So what could happen is price, you could get, you know, a couple of bullish candles and price could go up here. And a lot of times when price goes up, it's going to push up here and then it'll be a wick that comes down.
Right.
The candle will close below that green line. So now you'll have a candle, a wick that goes above that green line, and the candle will close. And many times that might happen at 12, the 12 midnight candle or the 1 p.m. candle. And then that next candle will buy back up. So if I ever see that and it buys back up, I'm entering for the sell as it's buying.
Okay.
Right? There's another way to do that too. You could put you a short at this line. And what I would have is a lot of critics will tell me, well, I don't think you should do that, Ty. You got to wait for a break of structure. And if you want to wait for a break of structure, you might not have any structure up to this level, right? It could just be 2 or 3 candles that come up to this level. So your structure break is down here. I'm getting in catbird because I have an understanding of what's happening. And this is exactly what ICT and those other guys mean when they tell you your guru can't catch these trades real time because they don't have a concept, they don't have an understanding of what's going on when it's happening. They won't see it. They won't see that trade until it comes down and breaks this low. You see what I'm saying?
Right. So they won't recognize it as it being a liquidity grab.
Yes. So that's what, in my opinion, what people have to work on. These markets do the same thing every day. And I get it. It might be a little nerve-wracking the first time you get in that trade, but you're not just jumping in the trade. You're going to see a candle that wicks. It's going to wick. And that's going to be your signal. Like, man, that's a wick and it closed below that high. I already knew where the high was. I marked the high up for a reason.
Right.
So, you know, when that price goes back above there, you have to trust what you're seeing and you got to get in for the sell. Put your stop loss above the wick high and
Right.
get in for the sell.
Right. Appreciate it. Thanks.
Yes, sir. Does everybody here believe that JPYs are selling? Do we have people that don't believe that? Big picture. And I only ask that because in my opinion, it should dictate the way you're looking to trade the pair. And here's what I mean. I'm going to move this black line to where this weekly, the high of last week, in my opinion, is an important high, because what I think is, no matter what JPY pair you're trading, this new candle, if it's going to be a red candle, it will more than likely go up and take out this high before we start selling. This is how I'm approaching the market. You don't necessarily have to do this. I'm just telling you what I think and how I'm approaching it. So if I'm looking at the market, I'm looking at this high as significant, right? So if the market comes up and takes out this high, I'm getting in for a short. Now, I realized that we did break, on the 1 hour, we broke this low, right? Or for some people, we broke that low. Other people, we didn't. But on the 1 hour, we broke that low, which would mean the market should pull back to the 78, right? There's an imbalance, pull back right here and start selling. That is also an option. So if you're ever torn between the two, I would mark out this low. So maybe maybe you're like me, and you want this high to get ran before we go lower. You're not getting the trade until this high gets ran. I'm going to make the market prove to me that it's willing to ignore that high. So this market can come up here, and I'm not interested unless we break this low. If it breaks that low, then I have to readjust, and I would fib from here to here to find out where this pullback is going to come in to get in for the low. So originally, I'm coming to the market, if I'm trading GJ, I want the last week's high to get ran. I want it to either get wicked, but it might get wicked on the 4 hour, which means I might have a 15-minute or a 1 hour candle closure above this high. But I want that high to get ran, and then I'm looking for shorts. So if we come up here and we stop and we start selling, I'm not just getting in for the sale like some people would do it, because a lot of times it'll start selling, and all this will happen on Asian session. It'll never break this low. So it'll sell, you'll get in for the sale, and then all of a sudden, at the end of Asian session or the start of London session, you'll get this strong move up. It'll be like it's buying. It'll be a strong move up, and it'll push up. It'll break this high. It's going to break the Asian session highs, and you'll be saying, "Oh man, this thing is going to buy." And all the while, it just did what we thought it was going to do. It ran those highs before it starts selling. Does that make sense? So it doesn't matter what JPY pair you're trading. If you're trading a JPY pair, I would always look for some form of liquidity to get taken. And if you have a hard time looking at liquidity, reach out to somebody, or go to YouTube and watch some liquidity videos. There are several forms of liquidity. All right, do I have any questions over anything we covered? Any comments?
No, but I do appreciate your time, man. And breaking that down and rating. I did reach out to you.
Okay. All right, y'all. If y'all had no questions,